Alrighty.
What do you got, water?
I got my Red Bull and my water, bro. the Spider-Man.
Yeah.
That's what I thought about the first time.
All right, guys.
That might be a thumbnail right
I think
there.
it should be. All right, hey guys, this is Pat Brennan from Founders Avenue. Today we have the honor of interviewing Vivek from Go Ahead Ventures, and of course we have our co-host,
Rao. Yeah.
Is it Rao?
Rao.
Oh man, I'm still learning. We just became partners a week ago, so
Yeah.
let's go ahead.
Taking
with
it step by step, you know.
So Vivek here, he's a talent scout for a venture startup. And so our objective here is to kind of help you guys get from 0 to 1. So how do you actually get noticed? How do you get seen?
Get in front of investors.
Kind of, yeah, how do you get investors to take attention in your product? Like most people here probably don't know what they're doing yet. So Vivek, tell us a little bit about yourself.
Yeah, for sure. First of all, thank you, Pat, and you for having me.
Yeah, of course.
I'll just give you a little bit of background. I just graduated undergrad last year, and then I got straight into grad school at Northeastern. And I'm doing my Master of Science in Project Management, and then I was very interested in the venture capital space. And so I joined Go Ahead Ventures as a VC scout. And so what we do at Go Ahead Ventures is we invest in any kind of technology company,
Right.
or any kind of technology startup. If you have a startup that has like even a little bit to do with technology, we invest in them.
Really?
So unless it's like a manufacturing facility or something, then we
You
kind of
sort of see it a different way.
Yeah.
Yeah.
And so we invest $200K to $1 million
Right.
in pre-seed and seed stage startups.
Now that I thought about it, total caveat, I'm pretty sure I applied to Go Ahead Ventures.
Did you really?
Yeah.
Absolutely.
Yeah. Your logo's red, no?
Right.
Exactly. Yeah.
That's
I did.
funny.
Yeah.
That's funny. What year was that?
Last year.
Last year?
Yeah.
They
Were you
turned
there yet?
They turned you down?
No.
Yeah, they turned me down. See, if I knew him,
Right.
yeah, he would got
exactly.
me a plug in.
Yeah. That's funny.
Straight in.
Yeah.
Managing partner.
Yeah. So, kind of, how did you got in it through like an internship scenario, right? Is that what led you into it, or?
No, so I was part of a Slack group online called the Gen Z VCs, and then I was very interested because in India I was part of many Slack groups to be in the VC space, but
Yeah.
in the US I had no idea.
So
Right.
did you always want to do it?
Absolutely, because after I graduated college, I wanted to be in the startup space,
Yeah.
like to talk with founders, and I also had like a background in finance. Right, so I wanted to combine that people skills and finance skills, and venture capital is the best place to be.
Oh, right,
Right.
for sure, yeah.
Yes,
I
so-
think everybody has this notion that like venture capital is a scary thing, like,
No.
and it's actually a huge network. Like people really do try to contribute and like help each other out, and you don't have like I know that from experience now, you don't have to like just pitch you to a venture capitalist. You want to actually create a network, actually work with them before you even pitch. Right? Is that
Exactly.
Is that right?
Yeah. So, for example, if you meet somebody like a partner at a firm or a
Yeah.
VC firm, what you should not do is just pitch your startup from the ground up.
Right.
So you should talk to them about where you're from, the problems you're facing right now, and then after a couple of minutes of conversation, you say, hey, I had this idea, and I'm implementing this idea through these various different things, and then that's how I have a startup right now, and I know that you also work at such and such VC firm that invest in these kinds of startups, and I would love to get to know you. I would love to know, to chat with you over a cup of coffee or something.
Right.
Because they're there at an event to talk to everybody.
Right.
Right. So maybe they'll talk maybe for 5 minutes, and then they'll just go to somebody else. So the best thing to do is like give a small intro that has like the motivation for your startup, the problem, the solution, and your team. And then say, hey, we can catch up on LinkedIn, or you can give me your number, and we can stay in touch.
Right.
And then meet them over a cup of coffee or something.
Yeah, so you mentioned like getting in front of them. So at social networking events, I think we're partnering with the CIC and Venture Cafe.
Beautiful, yeah.
And that's kind of how we did it. So how would a normal person who doesn't live in, say, the Boston area where startups are everywhere, how does a normal person go about finding a VC or finding an angel investor?
So the best thing to do is to be online, right? The best tool is LinkedIn.
Yeah.
And so there are so many groups, so many communities on LinkedIn, and so many influencers you can follow. So what I did was I'll just type in venture capital or investments, venture capital investments, hashtags and everything, and then I could see people who post stuff like that. And then what I do is I go to their profiles and I see what groups they're part of, and I see who the people they're following, and so they're parts of various different groups, which is like investment only, right? So that's one way. I can just click join and I'll introduce myself in those groups, and that's one way, right?
Yeah.
And then you could attend events in your state, in your city too. So you can go on Eventbrite, you can go on different event
really?
meetup platforms.
So what are some of those? Let's name them off, like 3 groups and like a couple of those.
Yeah, so there's
platforms.
Eventbrite, there's meetup.com, there's LinkedIn. So that's pretty much it, I guess.
Yeah.
And because they have so many groups on it, it's like way, a lot of them.
It's flooded, yeah. And so I think that's a major thing, because I actually moved up here specifically for the network. Like I'm from Florida, and there's only 2 things to do. You either go swim in the water or you go to a bar next to the water. There's really nothing else to do.
Or you wrestle the crocodiles.
Yeah, you can wrestle some alligators. Snakes and stuff like that.
A lot of people are moving from California to Florida right now.
Yeah, I know. We're not getting into that.
The Great Escape.
I have opinions. I'm not going to talk about it. So let's see. We're going to split this out.
Maybe I can ask a question real quick.
Yeah, go ahead.
Sure.
So I know that we're talking about going in person at these network events to be able to meet investors, meet potential VCs. But what about you're trying to get your pitch deck in front of as many investors as possible, right? Because there's 2 strategies that I've heard about as I was going through the fundraising process. One is you invest the time, you go into and you try to find the events, right? Where the right places to be in person to be able to speak to people. And if you're not lucky, you're not going to be able to get in front of these people, because everybody's going to these events to try to speak to the investor. So the other approach, which is like you get a list of Excel of just a bunch of VCs, a bunch of different cold emails. Like I think I went through 200 VCs, and just be able to email them. You know, you write out like a short. I've tweaked that email so many different times.
You
right?
customized it,
Yeah. Well, you want to. I mean, I've never been able. Nobody has taught me how to do this, right? So like, my thought was, you don't want to bombard them with a whole bunch of information about your startup. It's really just like keys. This is what we're doing. This is the problem we're solving. Can we get in touch? And so. Now that I've met you, I'm thinking about kind of another approach, which is like instead of directly reaching out to partners, investors at VCs, go after the venture scouts, right? Because you guys have kind of a broader network, and your objective and you're incentivized to do this is to speak to as many startups as possible.
Exactly.
Right.
So it's good that you mentioned that, because I've seen so many VC scouts, and they don't scout for just one VC firm. Right. They have like multiple VC firms.
Right.
And believe it or not, they don't get as many emails as investors do. Right? Because nobody
That's
knows.
my mistake.
Exactly.
That's my mistake.
So if you get in touch with a VC scout and say, hey, this is the problem we're working on, you could literally go to LinkedIn and search VC scout in your area or area that you want to be part of. And there are like so many.
I wish I knew about that.
This is a gem right now. This is a gem.
Y'all are lucky. Hearing it first.
Because I made the mistake of going directly to the investors, and they get bombarded with so many emails. And so if you're not up to a benchmark, and they don't want to spend any time working with you to figure out exactly, maybe you didn't convey that idea straightforward enough, right? But with someone like VC Scouts, their incentive is there.
Connect you.
The incentive is there for you to be able to push startups that you really think are worth it.
So let's get into like how does someone, we got through like how does somebody get in front of them, but like who actually gets invested? So what type of things lead an investor to say, okay, we're going to give you money right now? So I know you have to have a pitch deck and you have to have all these things. Now, what are those procedures that you look for or the investors look for to say, okay, this person's ready to get in front of me?
Exactly. Okay. So there are 2 parts to this, right? The first one is the logical part, and then the second one is the emotional part. I'd call it that way, because the emotional part is the motivation for you to start up, right? Why did you start this startup or this company? What led you to believe in this? And I've heard a couple of motivation stories, and the one that really stood out was something happened to their mom, or something happened in their life that they were like, you know what, I want to change this. And it's like it got really, really personal to them, and they're like, they had this motivation to just change it. And then when they speak to you, you know that they're passionate about it.
Yeah.
Right? That's like one part
Yeah.
about the motivation. That's like one emotional aspect. But also the logical aspect is very important because the numbers has to be there. You have to be in a market that's like, like a big enough market to
Yeah,
invest.
that's
right? So
noticeable
your growth
now,
numbers
yeah.
have to be there. Your customers have to buy it. It has to make sense that people can actually buy it. Right? So there's the number part of it, and there's like the emotional part of it.
Right.
So you need to know how to manage those both and sell them to investors. And that's, one of the main parts of getting investors.
Yeah, like that initial scene in Shark Tank when they give their pitch and then they immediately dive into like, what's your
Exactly.
background story? That I have found more and more recently that is the most important thing that I've been asked over and over and over again.
Right.
Yeah.
Since going down this journey now. So I know we mentioned it a little bit, and off camera you said something about PR specifically that the investors are looking for. Like, what kind of PR are we talking here?
Right. So what I would like to say is, before even getting into the PR, you need to make sure that you have a really good online presence or a personal brand, so that when you say, hey, these are the things that I did, like you can check out my LinkedIn posts or Twitter, and they'll check it out, right?
Right.
And then they'll have this kind of thing that, okay, this guy knows what he's talking about. So the first thing to do is building a personal brand. And after that, the PR is, you can reach out to journalists. Like, for example, in Boston, there's like Boston Innov and there's Boston Globe, right? The best
Yeah.
thing to do is to get in touch with nonprofits in your locality. For example, in Boston, I volunteer at Startup Boston, right? So what we do is we help founders get connected with investors.
Yeah.
And so through events and through conferences, and then we have like press at those events, right? Media at those events. So when you go there, you can say, hey, I could talk about my startup. I'm from this background and I want to show it to the world.
It's funny you mentioned Startup Week. That's where I met you.
Yeah.
6 months ago. That's so funny. I knew you from somewhere. Startup Week's awesome. It's run by Mass Challenge. It's a week long of conferences.
Startup Boston and Mass Challenge.
In Boston, yeah, Boston Mass Challenge. Yeah, it's awesome. And Mass Challenge is an accelerator program. If you're interested, accelerator programs are what you should consider before even seeking investors.
Exactly.
They give you money, they give you a network, they
polish you.
They polish you, as a person, so you can get that PR as well.
Yeah.
Very interesting that you bring that up.
Yeah.
I think most people I've talked to actually don't create personal brand aside from like Twitter.
Yeah.
Now, I personally don't enjoy being on Twitter. I don't like being on social media, period, but it's one of those things that you kind of have to
You gotta do it,
Yeah.
And I do think that having a name and a face out there is one of the most vital things. So what specifically are some of the people you've invested in, your company's invested in? What have they done to kind of get noticed? And then also, like, who are those people? Right?
So at Go Ahead Ventures, we invest in any kind of tech startup, right? So it could be health tech, it could be AI, crypto, whatever, right?
Yeah.
And so it really depends on the kind of founder and as I mentioned, the story. And it really depends because we've invested in founders that are second-time founders, and also first-time founders also. And the difference is how they pitch or how they sell themselves. And it also, I think, matters a little bit of luck.
Yeah.
That matters.
For sure.
Definitely.
Yeah, and we've seen people or startups that have like not a lot of growth rate, but because their story is so appealing and passionate, and they have that background, we just decided to go and invest.
Right. Yeah. So these people are creating like a persona of their skills and history, and how much do you look into like their actual personality?
Oh, I think as a venture capitalist, I think 90% of the thing that we look at is the founders.
Yeah.
Right. So we don't care like if you're making losses so far. What we care is how do you solve them in the future, and who are you as a person? Like your motivation is what matters to us. And if you can sell that to investors, you're good.
Right.
And you have to sell it in a way that it doesn't sound long enough, but it's not too short also.
Yeah.
Maybe like 30 seconds or 40 seconds
Right.
pitch. You'll be good. You'll grab that attention and they'll remember you because they get like pitches every day, right?
Yeah. It's
And
that.
if you keep it like short, simple, stupid, concise, and clear,
Yeah.
you get their attention.
It's the elevator pitch that everybody talks about.
Right.
Exactly. And most investors, for example, let's say I've only invested in crypto startups, for example.
Yeah.
And then this year I'm like, you know what, crypto market is not doing that well.
Yeah.
So I want to invest in, let's say, health, right? And I have no idea about the health tech sector, the space. So if you're a founder in the health space, and if you're pitching it to me, you got to really dumb it down.
Yeah.
Yeah.
Because if you're talking about these, terms and lingos, I have no idea what you're talking about. So you really have to dumb it down to the point that even a 5-year-old kid can understand what you're talking about.
Exactly.
Right.
Yeah.
So, yeah, and
that's definitely the
they'll
hardest part
understand
a lot of the time too, because I have a pretty complex idea with Cadly, and narrowing it down, because it's a bunch of things being pulled together,
Exactly.
is very difficult, especially considering I have an engineering background as well. So like I can definitely get in the weeds, but I'm not going to.
Yeah.
Right?
Exactly.
Yeah.
So you basically said it though. It's, what's that phrase? Betting on the rider, not the horse. Is that
Exactly.
how it is?
Yeah.
So that actually does hold water. I've heard that quite a bit.
You can know like all the technical aspects of a thing, but if you're talking to somebody outside your field, it's like a doctor, right?
Right.
Like if you tell him that something's gone wrong, he doesn't explain it to how we would to another
So you
surgeon
need
or
bedside
something.
manner, is what you're
Exactly.
saying.
Yeah. Also, I mean, this is kind of a double-edged sword, right? If you present yourself well, if you seem like you're the right character to be invested in, you will get invested in. But a lot of the times we've seen this happen too with, if you're good at social engineering, you can really spin anything out of nothing.
Right.
Yeah.
I mean, we can go into the cases for how that's happened recently, but
And that's how you can do it, right? You can go to like events like these and just put yourself out there.
Yeah.
And not only do you build your network, you also build your social skills.
Right.
Right. So it's like you know how to talk to people and sell yourself, and the more you do it, the better you get at it.
yeah, absolutely.
It is hard though. Like you lose a little bit of like your mystery. I don't know what's a good word for that. Like, but you replace it with a personal brand and kind of create an identity out of yourself.
I see.
But privacy is the word.
Okay, I gotcha. Talk a little bit more about the biases towards somebody who's been working in FANG for 12, 14 years, that's coming out essentially as a first-time founder, or somebody who's started a company before, whether they succeed or not, raise funding or not, taking a product to profit or not. What are the differences there as a venture scout, and how does a VC perceive that?
Exactly. So that's a good question, right? Because I've met a couple of venture capitalists that they had a startup in their former years, and then it failed, and then they had like a second startup, and that failed, and third startup just blew it off the park.
Yeah.
And then they became an investor.
Yeah.
Right. So when they see a second-time founder,
Yeah.
they'll think, I had the same background, so maybe this kid's got potential.
Yeah.
They might invest.
Yeah.
And so I've seen investors who've just got there without any entrepreneurial experience, and just they started as a VC from their own.
Yeah.
And then they look at like second-time founders and they go, you know what, this guy, he failed the first time, so probably not. I'm gonna choose that person who's got like the fresh experience.
It's interesting though. Like if you failed before, you have more experience and you know what you did wrong.
Exactly.
But it's a matter of how did you recover after?
Yeah.
How did you solve the problem after the fact? Of like, all right, did you jump back on the next horse? Did you keep going? And I have found that there's like sometimes I won't touch it again. Now, what led them to say I don't want to go anywhere near that company again? Like, is that founder specific, or is it just kind of a mindset that you failed and we don't trust you anymore?
Yeah, so it also depends on the portfolio of the startups, right? As a VC firm, you would have had like a lot of losses also. So you would see at these kinds of losses, and you would analyze, okay, so this startup in this sector made these kinds of losses because their founders weren't as active as before, or they had some issue going on that they weren't ready to resolve. And so it really depends from a VC standpoint, but at this, today's world, there's a lot of VCs, right?
Yeah.
So even if you get rejected by one VC from a lot of them.
There's a
So
ton of fish in
it
the
really
sea.
depends on the perspective of the VC. But there are startups that get invested, or they get rejected by one VC, but they get approved by another.
Yeah.
And when they get approved by this VC, this guy is like, wait, did I do something wrong? Why is this guy investing that I'm not?
Exactly.
So it's like the more people that want to invest, the more you build.
Yeah. So I've heard this narrative before about how as a startup founder, getting invested from a VC is almost like dating, right? Like you might get rejected from a lot of potential candidates, but one will hit.
Yeah.
So that's one narrative. And then the other one that you're talking about here about kind of this like regret of a VC, like, oh, I passed on this potential startup that other people sees value in. Tell me about your experience and kind of seeing VCs jump into investments because some bigger guy, a bigger VC has done it, right? Because that's kind of the narrative that I've heard quite a lot in the VC firm, is that everybody wants to be, we're the contrarian investors. We're different because we invest in this, right?
Yeah.
We invest in the people, but everybody says this, which is quite not true, to be honest. Not always true.
Yeah, so when I was in India, this is like an interesting story. There's this VC firm, and one of the people that I know interacted with them, and then they pitched them, and they said no, right? And then I think a couple of months later, they got a term sheet from Sequoia Capital.
Oh wow! Yeah.
And they didn't go out of their way and tell the previous guys, hey, look, we got invested.
Yeah.
But because Sequoia is like a big network, everybody got to know about it.
Yeah.
And then the other VC firm, they're like, they reached out to them and they said, maybe we can take like 1%, we'll give you more than capital than you requested, right?
Yeah.
And so that really happens sometimes, but there are cases where it doesn't happen at all.
Right.
Because VC firms also have a lot of options in terms of startups to invest in.
Yeah.
You mentioned percentages there. I think we should dive into that a little bit. So, pre-seed, seed, and venture. Now, what types of percentages are common and should, for the people who don't know, like, you don't want to give away your company.
A lot of equity.
Right, because at the end of the day, you'll dilute your shares.
Yeah.
It'd
And
be like a hostile takeover.
right, yeah, you don't have any skin in the game, so why would you even continue?
Exactly.
Right, and we'll get into that more, but what are some of the pre-seed, let's start with pre-seed. What kind of percentages are we looking at?
So at Go Ahead Ventures, it doesn't matter if you're pre-seed or seed, we invest 8% to 15%. So normally it's the average is 10% to 12%, but we've gone from 8% to even 15% sometimes.
Yeah.
But usually it's 10 to 12. If it's pre-seed or seed.
Yeah.
But it really depends on different VC firms. I've seen them invest 5%, and they give more equity. more capital, and then I've seen them give 15%. Not
right.
Yeah. But it's usually about the resources that the VC offers.
And for people who don't know, pre-seed means you haven't built your product yet. You're still in ideation. You're on your process of building it, but you need capital.
Strategy and everything.
Yeah. So it's usually for bigger companies that will take more money, more capital to actually build out.
Yeah. Potentially having an MVP.
Right.
In a way.
Yeah. And an MVP, obviously, if you don't know, is a minimum viable product. Just it proves your concept works.
Yeah.
Now, seed is where you have an MVP, and that's generally where people start to go after investors.
Yeah. If you have some customers already, that's key in raising seed.
Oh yeah. Because customer acquisition is almost like, it's very important, right?
Yeah.
So it shows the VC that okay, this guy, he's not just talking about the future, like, okay, we're gonna have these many customers in the future, or this is my growth strategy in the future. It's like we already have customers lined up.
Yeah.
So they'll think, okay, he has a lot of traction going on.
Yeah.
And this might increase over time because he was right 10 months ago.
Yeah.
And now he's like, I'm going to get more, so he might be right in the next 10 months.
Yeah, the best sort of validation for any sort of idea is somebody willing to pay for your product, right? At the end of the day. So if you can get one paying customer, that's better than having zero.
Yeah,
right?
for sure.
If you have 100, you can go to investors and say, hey, we have 100, we've sold 100 units.
Yeah.
Whatever it is, it brings that validation towards your idea.
A lot of like startups that are bootstrapped. For example, for those of you that don't know what a bootstrap startup is, a bootstrap startup is a startup that has taken no investments from any VCs or angels. They got started with their own money and they became big with their own money, right? And so most of these bootstrap startups, they don't look for VCs, right?
Yeah.
Because as you mentioned, they want to grow on their own.
Yeah.
And it doesn't always matter to have a VC support you as long as you believe in your product yourself.
Yeah, and if you can get paying customer early enough and you can take that money, bring it back invested, then you don't have to take the early dilution in your company.
Because the customer pays for all your expenses,
Exactly, exactly. Yeah, absolutely.
Definitely do that. If you do not need investors, don't do it.
Yeah.
No offense. I know you want them, but let's go into that a little bit. So what's the kind of, there's a culture behind venture capital, getting an investor. Like a lot of people believe that once they get venture capital, they did it, they made it, right?
Did we talk about this last time?
I think we might
Yeah,
have,
yeah.
but now we have somebody
Yeah.
who has the inside scoop. What
Yeah.
what do you see is like the trend behind that?
So it really depends again on the startup, but we've seen startups that get invested because think of it from the VC perspective, right? So we invest in, let's say, 10 startups, and let's say 9 of them make losses.
Yeah.
And then that one remaining startup might just cover our losses.
Right.
We can make a lot of money and just blow up, right? So VC see a lot of failed startups every single day. And so when your startup fails, it might be because for so many reasons. So it might be because you gave away too much share, or you took too much, capital, and then you couldn't allocate it properly. But as a VC, we invest, like as I mentioned, like in a lot of startups, and all of them, I mean, not all of them, but a lot of them fail.
Right.
And then the ones that succeed are the ones that make us like that kind of money.
Right.
Now, is there some kind of factor with like the team that they have going into it, like, or say somebody is a solo founder, no advisors, obviously,
Oh yeah.
What do you guys look at on that end?
So do you mean like as a solopreneur? Do you want to?
You can do solo. What kind of team? Like, all right, let's start with solo and co-founder scenario.
Yeah.
Like, is it harder? I'm sure it is, right? But to get the investment, what's your take on it?
I mean, if you have co-founders, that's a really good point. I mean, you're at a benefit there because you have people who think differently than you do, and that's very important. But if you're a co-founder, you're the one that makes almost all the decisions because if there's a problem that your employees can't solve, that comes up to your VPs.
Right.
And if they can't solve it, that comes up to like the advisor, and then it comes up to you. Right. So you have a lot of problems that you're facing on a day-to-day basis, and if you have co-founders, that really matters because VCs invest in it. Because when you pitch your startup to an investor, they think, okay, this team, they seem okay. But if it's a co-founder, it's about how you pitch, right? But I think it's always a plus point if you have co-founders.
To have
on
a
your team.
co-founder.
Yeah.
I will say that if you are a solopreneur and you're trying to seek funding, if you have technical field expertise in the industry that you're working on, say if it's like deep tech, you've been working on machine learning for the last 12 years and you're now coming out with an AI project, that potentially can show a lot more credit, right? Because you can do that by yourself.
And one thing to add upon that also is to build your personal brand.
Yeah.
Right. So if you have a good personal brand, people follow you, and if you're the only co-founder, and if you can showcase that to VCs, they'll be like, okay, this guy seems trustworthy.
Yeah.
Because he already has people believing in him, and so his network is also beneficial. It's not just the VC's resources or network.
Right.
Yeah.
Right. So if you're a single founder of a company or a startup, and if you have like a lot of people who believe in you, that's a lot better than if you're a solopreneur and you're just starting out. So it just seems unfair, but that's what it is, right?
Yeah.
That's true, yeah.
Like you got to build your network from the way up.
Which is what I'm doing right now.
Yeah, exactly. Oh, kudos, man. That's
Thanks, man. I have a PR guy. But I think that's pretty good, man.